Welcome back, and joining me with his analysis of what's played itself out on the market scene today is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. I must say I am surprised that I'm not seeing, I guess, more risk sentiment in the markets today, considering the fact that we have the US voters going to the polls tomorrow. Talk to me about how you're viewing the way that markets have traded today ahead of that US election.
This happens to be one of the most important weeks for the US for 2024 because of the elections. But other than that, we've got the rate decision by the US Fed on Thursday, and we expect a 25 basis point cut. Bank of England as well on Thursday. And I think tomorrow is the Bank of Australia, which you expect them just to hold. But yes, markets are largely to remain on edge, and that's ahead of that. But remember, before that, we had what we call a Trump trade, where people were expecting that his policies are inflationary. But now, should the opposite happen, that it doesn't get to win, then we should expect to see the unwinding. And I think a report which came out last night or so early this morning indicating that Harris is apparently ahead of Trump as we see almost the unwinding of that kind of a trade. But markets generally will like to play wait and see, And yes, we are not sure whether the polls are right or not. But as it stands now, we know that it continues to be a very tight race. But I think, should it happen that the guy gets to win, then we'll continue to see people trading in such a way that it expect inflation to go up. And should Harris win, then we should be seeing the unwinding of all those trades. But generally, markets sometimes get it right or wrong, but it seems as if ordinary people, they tend to believe what the markets think will happen. But hey, it's only a day. We'll be knowing exactly what is happening.
All right. And actually, thank you for clearing that up, that we'll be getting the Fed's interest rate decision on Thursday, because I know it's usually Wednesday, but I'm like, how does it work with the election? So, yeah, we are getting that on Thursday. Makwe, just on that, I mean, how are you feeling about it? Has anything changed in terms of how what you think the tone of the Fed will be on Thursday, considering the small jobs growth that we saw in the non-farm payrolls on Friday?
Not really, we still expect that 25 basis point cut and still expect another one in December because they said it's going to be data driven. Inflation continues to be doing okay, and we know those numbers, they had a very negative impact coming from your hurricane, stuff like that. So yes, we know even for the two previous months, they had to revise them down, but still it just indicates that it's still cooling when it comes to the labor market, but it's not cooling to the extent that it can tamper with their rate decision because the guys, in a way, don't want to tilt the U.S. economy into a recession. And one can safely say they've managed to catch up, as we know that they were kind of behind the curve when other guys started cutting interest rates. Hence, it was not surprising when they came with the first jumbo rate cut, in a way, trying to play more of a catch-up more than anything.
All right. Well, let's go into company results that came out of the JSE today. Mark, we're starting off with Ultron's interim results. They had quite a lot of highlights there, getting an increase in the bottom line, which led to a 60% increase in the dividend. We did see that share price climbing about 4%. What's your take on Ultron's performance?
I think it's a good performance, and I think we tend to forget about our ICT companies, I mean, we've just last time checking on the data tech, but we get excited with the Magnificent Seven. All these guys, they tend to benefit, from demand when it comes to IT, whether it's security, whether it's cloud, whether it's their play when it comes to AI, and even companies as well trying to secure, what they need to secure and try to move with the times. Yes, their revenue was down almost 2%, but the overall financial performance in the form of EBITDA was up nicely to 9%. And maybe that is why it's not surprising to see them increasing their dividends, as you said in your intro.
All right, let's go into property. Redefine came out with annual results. There was an increase in revenue there, both in South Africa and Poland, but there was pressure there on a distributable income per share. Markets didn't really react to those numbers. Trading was relatively flat. Would you say that this was maybe a satisfactory performance?
It is, coming to think that they're coming from a very challenging time. They still have to deal, with the effects of interest rates, which were elevated for a longer period of time. But there are positives going forward. And we can see that we know ordinarily that confidence and interest rates tend to work in tandem. And now the yield should be going down. That happening, that should help the share prices of these kind of companies. So now then the stock market becomes their oyster in the sense that they can either use script, as settlement currency, or that also improves the fundamentals. And revenue up almost 7.5%, at headline earnings per share almost 57%. And I think the whole issue is going forward because political uncertainty has been reduced. We don't have load shedding, and we continue to expect to see more interest rate cuts going forward.
All right. Well, Makwe, let us get to your stock pick. What are you choosing today?
I'll go for Lewis Group. Lewis Group, they continue to make good money from their traditional brands. We are best of this world. And this is one company that is doing well when it comes to credit sales because they're very good when it comes to collections. Collections sitting at almost record highs. And now we know that traditionally, people, when they say interest rates going down, then they will be more enticed. And their PE at 8 is not demanding compared to their peers. And they've got a good dividend yield of just over 6%, better than their peers.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Makwe. That was Makwe Masilela from Makwe Fund Managers.